Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hey, good morning.
Hey, good morning, real estate investors, and welcome to the Canadian Real Estate Investing Morning Show. On today's show, what we're going to be talking about bank accounts and how to manage your bank accounts when you own a massive real estate portfolio. Additionally, we're going to be answering another listener question about tenant damages, and we're going to be diving into capital gains. When you sell a property, what do you have to pay? We're going to be talking about that as well.
Yes, and speaking of listeners, welcome to everybody who's joining us live on YouTube this morning. I see we have Kirsten here. Good morning. Looks like Carmen has also said good morning. We have Craig. Craig, good morning.
Good
We're
morning.
so happy to have you guys here.
Good morning, guys. Craig actually sent me a message last night. Craig told me that he unfortunately missed the live show yesterday morning, but he caught up on it later in the day after work, which I thought was fantastic. And I love the fact that he went out of his way to let me know around 8 or 9 o'clock last night, hey, I missed the show, but I just wanted to say, I too hate cats. He didn't say I hate cats. I'm paraphrasing.
Do you want to know what's even funnier though?
He says, I would have supported you.
Yes, he said he would have had Wayne's back yesterday, and so be it. Everybody's entitled to their opinions. So thank you, Craig, so much for that input. And this morning, I came into the studio to get ready this morning. Wayne was still doing whatever he was doing. And I looked down at the paper in front of his spot, and on his page, it says, cats are dumb.
I had to write it down just in case I forgot.
Just in case you forgot, because you really needed to say that yesterday. I was like, I almost took a picture to post it and just to really out you for anybody who doesn't listen to the podcast, but
could have been worse. It could have said cats are fucked.
Good morning to Anastasia. She's here with us this morning as well. And Maya Toma we have says, good morning. This show goes hand in hand with coffee. Yes. Mm-hmm. Cheers. Mm-hmm. Cheers.
Cheers.
Take
indeed.
A sip.
Mine's a little cold though. We got to talk a little bit about that missed sponsorship opportunity with Ember. So this show has been going on since 2019, and since sometime around 2021, 2020, I've been supporting Ember, the heated cups, not these cups, another cup. And I talk about Ember all the time. Talk about how I love my Ember cup. I talk about how I use my Ember cup all day. It's always next to me at my desk while I'm working, while I'm building my massive real estate portfolio, while I'm building wealth for my family, while I'm helping others across Canada build wealth through real estate. And I love that my coffee is always next to me at a perfect 56.5 degrees Celsius. Thanks, Ember. And I told Ember, I'm just putting it out there into the world. I'm like, somebody let Ember know, because I want to support Ember. I want Ember to sponsor this podcast. And you know what? They never did. So now, Gabby bought these custom REI Masters mugs on Vistaprint or something, and that's what I use. But by the time I get downstairs into my studio and I sit down, well, my coffee's cold. This is the only time of day that I drink my coffee cold.
Thanks.
The rest of the day, I drink my coffee at a perfect 56.5 degrees Celsius, thanks to a company left to be unknown.
Yeah, we'll just leave it at that.
Why are you looking at the bottom of the cup? What's on the bottom of the cup?
See if there's a brand.
No, but it does say hand wash recommended, and you've been putting this in the dishwasher.
Hand wash recommended, just so it doesn't scratch the coating and stuff. Yeah, I'm not a hand washer.
What's BPA stand for?
Say no BPA.
What does it stand for?
Some sort of plastics.
If it did have BPA, would that make a difference? It's BPA free. But it says hand wash recommended. You've been throwing it in the microwave. So what's
in the microwave?
I mean, you've been throwing it in the dishwasher. What's the deal with that?
Like why I put it in the dishwasher? Because I'm lazy?
No, I mean, like why?
Why is it not supposed to go in the dishwasher? Yeah. Because it scratches the coating. Because they like etched into the coating.
Oh,
so you can
is that why it's chipping away?
Yeah.
All right.
Yeah.
Man, that coffee's almost done. It's so cold. All right.
Anyways, I also wanted to say good morning to Phil. Good morning to Francis, who are also here with us this morning.
And so we're going to be continuing the discussion from yesterday as well. It looks like Craig in here is in the chat here, and he's not wasting any time telling us how he really feels about cats. He says cats are useless. Can't trust.
I agree that you can't trust a cat.
Words.
I agree that you can't trust a cat.
Can't trust.
But they're not useless. They are lovely. I love cats.
What are they useful for?
For
go
loving.
ahead, say that they eat mice.
They do. They hunt mice.
So do snakes.
But dogs don't.
Yeah, that's true.
In fact, dogs might be seen as actually useless.
Dogs are security.
Well, yeah, they protect you. That's fair.
Did you see that Italian Mastiff yesterday?
Yeah.
Holy shit. No one's stealing my scrap metal. Mm-mm. All right, let's dive into this. So, question came in. This question actually came in through YouTube, and I said, "Hey, that's a great question. Send it by email." And then they never did. And then I just remembered this morning, and I thought, "Well, shit, I did say that I was going to answer that question." So I went and I found it, and the question was, "Hey guys, been listening to your podcast for almost 2 years." And thank you, by the way. I appreciate that. Since you're talking about selling some of your rentals, could you cover capital gains and realtor commissions on selling and other possible fees when it comes to selling? Mm-hmm. Looking forward to it. Mm-hmm. Just to start off, can you think of any other possible fees other than realtor commissions and capital gains?
GST and realtor commissions.
Okay.
No, but like I can think of expenses, but not like because of the transaction.
From the sale of it.
Yeah.
No.
Yeah.
So just those are the only two.
Yeah.
So rest assured, you don't have to worry about any unplanned expenses.
Well, again, there's expenses. There are expenses that come with selling a property,
such as
lawyer fees. Maybe you stage the property while it's vacant, cutting the lawn, removing the snow, keeping the utilities on. Like there's expenses that come with selling a property
during the sale of a property.
During the sale of it, yeah. I
like the lawn care and snow removal comment that you had there, because that's one that people just forget. When's the last time you got the grass cut at that property?
Weekly.
Does it get cut weekly?
It does, yeah.
You just take care of everything, eh?
I do take care of everything.
And that's just, and you just do that?
And I just do it, and I don't say anything.
And you don't say anything about it? Oh my God. Guys, this year for Christmas, get yourself a Gabby. My God. Isn't she great?
Yes, I am.
Mm-hmm.
And I guess I'll add to it, not to the lawn cutting and the snow removal, but when you do sell a property, at the end, your lawyer, along with the legal fees that you pay, will also give you a statement of adjustments. And on that statement of adjustments is going to be kind of like a tally of who owes who what. And so for things like property taxes, maybe you've paid them in full for the year. And so then the buyer will owe you a portion of those back, or maybe you haven't paid them yet. Maybe you're selling it in May and the bill wasn't due until June. And so there's, $3,000 worth of property taxes that are due. And you're going to owe your portion for the first part of the year to the seller. So those get adjusted off of the selling price. And then there's also things that can also be adjusted are condo fees. So if it's a condominiumized property, there might be owing condo fees or a portion of the month that are owing. Trying to think of what else might be adjusted on there.
When's
the last time you looked at one of those statement of adjustments, Wayne? Again, one of those things I take care of. But so those are, it's not a bill. It's not something that it's like, hey, hand over the $2,000 worth of property taxes that you owe, but it gets adjusted off of the money that you will be receiving in from the buyer.
Okay. Yeah. Stuff that people forget about. I think that people just assume that, oh, okay, well, I'm going to sell the property and this is how much I have left owing on the mortgage. So if I'm selling it for $500 and I owe $200, then I should be getting a $300,000 check. Not quite. There's a few other things. There's a few things, some adjustments, like Gabby said. And then you also have to consider your realtor payment as well, your realtor commission. And a lot of people forget that there is a GST on top of that, or depending on what province you're in, you might be paying a HST. So, it can be anywhere from 5 to 12%. I think it's 12. 5. I haven't been in Ontario in 20 years. What's HST?
I don't know.
Is it 12%? 5 plus 7?
I thought it was 6, but I don't know. I'm coming from BC.
What do you guys got?
I thought it was 6, but it's been
What's your
I've been
PST?
here for 20 years. Wow.
Yeah.
20 years this year.
You look good.
Thank you.
You look good. Been here almost half your life.
Yes.
Isn't that crazy?
Yeah.
You
Very
spent
crazy.
almost half your life with me. Isn't that crazy?
Yes. Anyways, we digress.
Yeah. Realtor commissions. Normally it is 7% on the first 100,000 and 3%, 3.3% on the remaining. Is that correct? Why am I brain dead right now? I know this answer.
Yeah, 7 and 3.
The lights are just really bright today. did you turn the lights up?
Starting to second guess yourself.
Why am I? That's not right. I'm a walking real estate encyclopedia. I should know that answer. Chat. Anyways, 7% on the first 100K and 3% on the remaining balance is the standard. So if it's $500,000, you're looking at $7,000 in the first 100,000, and on the remaining $400,000, it'd be 3% of that's another 12. So 7 plus 12,000 is $19,000 plus GST, which is in Alberta at least 5%. So $19,000 plus GST, you're looking at approximately $19,950.
Extra 1,000.
Yeah, you betcha.
Yeah.
You betcha. So that's another expense that you might have maybe forgot about when you sell it. And then the big one that everyone's always scared of because they don't want to sell their properties. And fucking government wants to take my fucking money. Capital gains tax.
Mm-hmm.
Guys, you must know my feelings on this by now. Taxes are inevitable. You're going to pay taxes on any money that you make. I don't understand why people are so butthurt about paying taxes on profits from a sale. You pay taxes on everything. The cool thing about capital gains tax is actually you're paying significantly less taxes on capital gains tax than any other tax.
Than any other income that you make.
Yes.
Yeah.
Any other income that you make, it is actually the least amount of tax that you pay. So what'll happen is, and it's not on the difference on the money that you made either. So you sell it for $500,000, but you only had a $200,000 mortgage. You're expecting a $300,000 check minus all the commissions and things like that. You're not paying taxes on $300,000. You're paying taxes actually. Your capital gains tax is on the difference from what you bought the house for, from what you sold it for. Okay. Not on your profits from sale or your proceeds. It is on the difference from what you bought it for and what you sell it for. Okay? It's the capital gains. So if you bought it for $400,000 and you sold it for, let's say if you bought it for $300,000, okay? And you sold it for $500,000. That means that you have $500,000 worth of capital gains. You would assume that you would be taxed on that full, sorry.
Let's back that up.
Go ahead. Just start over.
If you bought it for $300,000.
These lights today, what's going on? I can't think. I'm not thinking straight.
You bought it for $300,000 and you sold it for $500,000. You have $200,000 that you made off of that sale from what you bought it to what you paid. Gains.
You would assume, let's just edit that out. You would assume that you had to have to pay taxes on the full $200,000. No, you do not. In Canada, you are only taxed on half of the capital gains. A lot of people mix this up and they assume that it's a 50% tax rate. It's not. You are taxed on half of the capital gains. So if you have $200,000 worth of capital gains, you're only taxed on $100,000 of it. That does not mean that you have to pay $100,000. That means that the taxable income that you have that is going to be added to your personal income tax for the year is $100,000, and then that you'll get taxed on that based on whatever your tax rate is. So let's just say hypothetically you're in a 40% tax bracket for that. That means on the $200,000 worth of proceeds that you're $200,000 worth of capital gains you had, you're only paying $40,000 in taxes. Because it's $100,000 taxed at 40% is $40,000. Not that bad. So you bought a property for $300,000 and you sold it for $500,000. You made $200,000 off of the appreciation of that property. You only pay $40,000 in taxes. Some people might be looking at that and be like, well, where am I supposed to get that money from, huh? From the proceeds of sale, you dumbass.
Mm-hmm.
You just got a check for $300,000 minus realtor fees and other things. You probably got a check there for about $260,000. Set aside 40 of that into a bank account, throw it in a GIC for 6 months or something like that until tax year. Tax season comes, until you call up Fingo and you get your taxes done. And then you have the money set aside for it. And then go, if you do whatever you want with the other 220. It's really that simple, guys. And I'm sorry for the negative tone in this. Maybe I should, I could have, explained all this more positively. But the amount of people, the amount of ignorant people that I have, not this listener, but the amount of ignorant people I have reaching out to me or like commenting online, being super negative of never sell a rental property. Fucking government takes your money. Not that big of a deal. And yeah, there is alternative strategies like refinancing the property and pulling out your money tax-free instead. But at some point, you're going to have to pay taxes on your capital gains.
You're just delaying the inevitable.
You're just delaying it, right? There's no difference in holding off longer. I mean, the only difference is that holding off longer means that maybe you can hold off on paying taxes on that money and then continue to keep reinvesting that money before you pay taxes on it. So that way you get a higher return on borrowed money, essentially. Government borrowed money. It's depending on your perspective on it. But ultimately, at the end of the day, it's whatever you do, what's right for you and your business and whatever helps you scale and whatever helps you reach your goals. And I can help you out with figuring out the numbers behind that on whether you should sell or whether you shouldn't sell. But ultimately, at the end of the day, if you are going to cash in your chips, if you're gonna be like, oh, I'm done here, I'm cashing in my chips, and I'm gonna sell this property, or I'm gonna take my chips in and I'm gonna go to another table, play another game, just know that when you cash in your chips, the government is there with their hand out saying, how much did you make? Okay, take half of that, add it to your taxable income, and you're gonna be taxed at whatever your tax rate is. Okay, because the government takes taxes on any money that you make in Canada. The cool thing is that on real estate or in capital gains, they only tax you on half of it, which is pretty dope if you think about it. Quick note, no, Canada does not have a 1051 exchange. Unfortunately, the U.S. is the U.S. is even better. What the U.S. lets you do, the IRS lets you do, is they let you defer your taxes on the sale of a property as long as you're going to be taking those proceeds and investing them into another property, investment property, and you're going to be rolling it over, which is pretty dope. And we do not use that word loosely. Okay? Yeah. That is pretty dope. But whatever, it is what it is. We don't have that. Maybe one day we will. Maybe we won't. But still, only paying taxes on half of it is still pretty dope, in my opinion. We're going to take a quick little commercial break. When we come back, we've got a listener that got an email from a tenant. Said that they broke the shower head and they want to replace it with a lesser model than the model that was in there. How do you deal with that situation? And then after that, what we're going to be diving into is bank accounts. Let's play this scenario out. Worst case scenario, you absolutely kill it in real estate investing. You dominate and you build a massive real estate portfolio. How do you deal with the bank accounts? Now, I don't know the answer because I've never dealt with the bank accounts ever. Since we started real estate investing, I have never touched a bank account. I have no idea what they look like, how many we have, with what banks. But I have an expert right next to me that does, and she's going to help you out with that. So if you're planning on building and scaling a massive real estate portfolio and you're worried about bank accounts, That's a legitimate concern. However, I've got one of the top experts in Canada here to help you out with that. We'll get right into that when we come back from the break.
Real estate investors need to treat debt differently than homeowners, and at Kirkland & Brennan Mortgage Group, we understand that. For the last 11 years, we've helped real estate investors plan and build their portfolios. We understand how to help you avoid fees, penalties, getting yourself stuck, and making sure that the deal you're doing today doesn't stop the deal you want to do tomorrow. You can reach out to Keaton, Keaton, at kbmortgages.ca. Put plan in the subject line, and we'll help you build a plan and then realize it for your real estate goals. We also coordinate with the other professionals like your accountant, lawyer, realtor, and we will help you build your portfolio. So reach out. We'll do our best to help. Thanks, guys.
You've got showings, lease signings, suite renos, condo board meetings, credit checks, mortgage financing, and every so often the tenant clogs the sink because they shoved macaroni down there. Stop. Breathe. Leave the bookkeeping to Fingo. Fingo is specialized real estate bookkeeping by real estate investors with tailored services for maximum returns. Save time. Enhance your returns. Claim the plumbing repair for that ridiculous macaroni fiasco. Book your free consultation at fingo.com.
Summer. While everyone's getting distracted, this is when the market gets quiet. Not because the opportunities disappear, but because the people do. Vacations, long weekends, these are the distractions I'm talking about. And that's exactly when serious investors make their moves. At Calvin Realty, this is one of our favorite windows. Less competition, more flexibility, and sellers who are actually open to negotiating. While everyone else is stepping away, we're stepping in. If you're looking to buy right, not just buy fast, this is your edge. Calvin Realty. Opportunity doesn't take time off.
And we are back. Okay, let's get into this. Jared writes in, he's got a problem with the tenants. Not a problem per se. He says he has a great landlord and tenant relationship with this tenant. He says, I'm attaching a photo of an email from a tenant sent yesterday regarding a broken shower head that they accidentally broke. What were they doing in the shower? They got them breaking a shower head. What were they? Maybe they were hanging something from it.
I don't know. Well, this is actually something that I would like to discuss. Is like how did the shower head break? Because
Maybe,
I think this is an important part of this question that came in.
Probably hanging something from it. Maybe like one of those shower gel, like shampoo.
Caddies.
What do they call it?
Like a caddy?
Caddy, yeah. Or a swing. Don't
Those things aren't going to hold very
swing.
much.
Don't anchor a swing to the shower head. It's just not going to work. I'm no engineer. Sorry. The original shower head was a more expensive brand. It was for example, like a Moen. Mm-hmm. But what they suggested replacing, and the shower head was only 2 to 3 years old. Yeah. So this isn't not a rusted out shower head where it's like, the thing was ready to fall off. This is only 2 to 3 years old. So it's definitely a damage and not a, repair or replacement type thing. Now, they wrote an email and says, I bumped the shower head, and when it fell from its hook, it broke. How the hell does the shower head, how do you bump it? I mean, it's probably got 12 threads on there.
Well, so my assumption, because it says when it fell from its hook, my assumption is that it's one of those on like a cord. So it probably it's like one of those spare ones where it's in like a little clip and it popped out of the clip and probably fell and smashed.
Oh.
That's my guess. I don't know for sure. Alternatively, it would have been a screw on. And like you said, many threads. It must have been sitting right on the edge, and in order to be bumped and fall off, right?
I think you solved it, Daphne.
You think it was one of the ones on the cord? Yeah.
I think that makes the most sense.
Yeah. Either way, like in my mind.
Jankies.
In what?
Jankies. Velma?
Okay.
You did a good job solving the mystery.
Yeah, no, I got that.
Scoob?
I got that.
Yeah.
Okay.
Okay.
Regardless of what type of shower head it was, what I'm seeing here is that like I'm not really faulting the tenant. They bumped it, it fell, it broke. I don't think they were like messing around with it and smashed it. Like in my mind, I can't see a situation where they intentionally caused damage or even accidentally like were doing something that it's like, oh shoot, I shouldn't have done that. Do you know what I mean? Like in any situation that I can come up with in my mind, this was just an accident. Like something happened and it broke, right?
Yeah.
So, which brings me to the second part of this question.
Okay.
Which is in their email, they admitted, they said, hey, landlord, I'm so sorry. I bumped the shower head. It fell and it broke. I'm taking responsibility. I'd like to replace it. Are you okay if I ordered this shower head off of Amazon and replace it? If you'd like a different model, let me know. I'm happy to replace it with whatever you want. Okay.
It's so, yeah,
The email was lovely.
it was, I mean,
It's as responsible as a tenant as you can get. Right?
what she said. Honestly, man,
Yeah.
this is a rare occurrence
Yeah.
in this business. Someone comes along and says, hey, I'm about to order this one and repair it. I just want to let you know I broke it. And I just want to let you know before I replace it, what I broke. Is this okay? If not, then please let me know which one I can replace it with. I mean,
Yeah.
that's a super easy response. If
Yeah.
you do not like the cheap one that they have chosen from Amazon, because it's not, OEM or whatever, totally fine. You can say, no, I would like this one, please replace with the same model that I had before. And it seems like they're not going to have any issue with it. Or you can just accept the shower head that they're putting in there because it's probably fine, right?
Yeah,
and
for
just
sure.
move on. Because
Yeah.
had you bought that property and this cheaper shower head was on there, you probably would have never even, considered it.
Yeah, absolutely. But I actually want to take it in a slightly different direction, Wayne,
Okay.
because going back to what I said about how I really feel like the tenant wasn't at fault here, that the shower head broke, and as a landlord, that we should kind of take responsibility of replacing it. However, you've had the tenant reach out and say that they're willing to take responsibility. They bumped it, they're taking responsibility, they'll replace it. So they've come to you with a cheaper model than what was in there. And obviously this is, you've come to us now saying that it was a Moen that was originally in there and that was only 2 to 3 years old. So, if we know anything about plumbing fixtures, Moen is a good brand, and it comes with a higher price tag. And you can get really cheap ones on Amazon that look pretty, but sometimes they're, sometimes they don't even, like, their threading and stuff doesn't even match up well. But regardless, what I like about this is that they've come to you, they've claimed ownership of the situation. So you can, in my eyes, you have 2 options here. 3. One, like Wayne said, you just say, yeah, sure, whatever, replace it. That's great. Thank you so much. And you just have them replace it with whatever they're comfortable with. Number 2 is you say, hey, like, thank you so much for letting me know. The one that broke was a Moen, and it's a really high quality one. Are you good with replacing it with a replica of the one that you broke? Or 3, you could go back and say, hey, the one that broke was a Moen. It's a little bit more pricey. It's really high quality. It's good and lasting for a rental property. Would you be okay splitting the difference with me? Maybe we can go halfers on it. And because in my mind, had they just said it broke and it needs to be replaced, as a landlord, I would have went in and replaced it and fronted the whole bill.
That is a good
That's
point.
what probably would have normally happened. But you have a very responsible tenant in your property who is taking ownership. So I feel like there's 3 options here, right? You either say yes, you say, yeah, that's great, thank you, but it needs to be a Moen. It was a Moen, and that you broke, so please replace it with the same one. Or since you have a great relationship, maybe saying, hey, would you mind like going halfsies with me on this? I'm okay fronting a little bit of it. Is that Carmen? Yeah, Carmen in the comments says, I like the halfers. I do too. I think it's a good approach, and it shows, it maintains that relationship with the tenant. It's like, thank you for bringing it to my attention. I'd love to split the bill with you, and I'd like to replace it with the same model. I'll have it sent to the property if you could just replace it, and we can go halfers on it. What do you think, Wayne? What would you do? WWYD.
You already know the answer.
If this fell on
I
your
think
lap.
everybody already knows the answer.
If this fell on your lap, what would you do?
Everybody already knows the answer to this. And I don't want to be negative. I think you have a really good answer. I think I will say this. I'll say this. I would do one of those three options. So I agree.
You'd just let them replace it with a cheaper model.
I would let them replace it with a cheaper model. This
Yeah.
is I'm a bottom line type person.
Yeah. And the only reason,
Because Property Poppy said so.
the only reason I brought the other options to the table is because I can see in this email from the listener that it mattered to them, like that plumbing fixture mattered to them. They were like, hey, this thing was only 2 to 3 years old. It was they said example Moen, so maybe not a Moen, maybe some other more expensive brand. But they took the time out of their day to state that. So to me, and I know that some people are like that. Some people are like, I want high quality brand that is going to last long. It's going to last throughout tenants. I'm not going to have to replace it in the future. Right. So that's why I brought the other options.
No, I appreciate that. I really appreciate that. I love that you do these things that I don't do and that I don't even think about. And like I said, guys, this Christmas, get yourself a Gabby, because you cover all the things that I don't think about. And if you didn't do them, then this business would literally fall out from underneath. Like this, it would not hold up. It wouldn't hold up. And you take the time and consider people's feelings about situations. You take the time to be like, okay, this is a small investment into this relationship that might further this relationship and strengthen and solidify it. Mm-hmm. And that could mean that that's one more year of renewal. Yep. Or maybe 2 more years of renewal. And when a tenant renews, that means that's one less month of vacancy while you're trying to find another replacement. And that comes at a cost. A month of vacancy, on that $2,000 rental could be $1,500 worth of expenses for a month. Yeah. While I have to go and try and find a better replacement. And that's just 1 year. I mean, if they renew for 5 years, then there's 5 years worth of 1 month vacancies that I don't have to deal with. So 5 years times $1,500 is $7,500 worth of savings, and all because you decided to go halfers on $50 on a shower head. So I can see the value in that. I can also see the value in a strong relationship with a tenant who's respectful and honorable, and they're going to be the types of tenants that respect you and do what they're supposed to do. And I think that if you got a tenant that writes an email like that in a timely manner and offers to pay for something that they broke and does what they're supposed to do, you take good care of that tenant.
Yeah, hang on tight.
And I appreciate the fact that you said all those things and that you offered that. I appreciate the fact that Jared wrote this in and he considered it.
Yeah.
You know what I mean? It just shows that you're thinking the right way, right? And you're thinking like Gabby's thinking, and you're like, how do I build this business out right so that it's that it doesn't fall out from underneath while I'm out, scheming and scaling, right? And so that's typically where I am. I'm out scaling. I'm out focusing on the next deal. I'm out focused on growth. And growth is very important in your business, because if you're constantly just focusing on how can I write that email perfectly, or what if I covered half?
Everybody also needs a Wayne in the business. If you possess both of these things and you're able to balance them and manage them well and not spend too much time in one and neglecting the other, that's great. But when you can have two people come together whose strengths are in these different areas, like Wayne and I have, it's pretty magical. In the comments, Manny says, "I'm looking for my Gabby right now," and I'm thankful that I have my Wayne, because I am not a Wayne.
It's I can't get stuck in those micro decisions, because if I do, I will get overwhelmed. And I see so many real estate investors getting overwhelmed with the micro decisions, which drains their energy and drains their bandwidth so that they don't have any room or anything left in the tank for large macro decisions, large growth decisions. And that's where I spend my time on, is in the macro side of the business. And like, how do I get the next deal? How do I raise that $500,000? How do I, you know what I mean? Mm-hmm. What's the next big thing? And so my job is mainly on acquisitions, capital raising, and on the scaling side.
Yeah. And
growth. And so that's why, for me, if I saw that email, I'd be like, and this nice email, they even attached the Amazon link and whatever, I would have said, okay, thanks. Read. One less thing I got to worry about, because I've got another 50 emails to go through. If that's an email where someone emailed me and came up with a solution, sounds good. Thanks.
Yeah.
Right?
Yeah. And see, on my end, even if I were to accept that they replace it with whatever their suggestion was, there would be more care and attention into the response. It would be, thank you so much for letting me know that this happened, and for, taking the lead on ordering a replacement and getting it fixed. I really appreciate, the care and attention that you take into, living in this property. Thank you so much.
Oh my God, that email's way too long.
No, it shows them that you care and that you appreciate them. And again, that renewal that's coming up, right?
I would have given them a smiley emoji. An emoji says all of that.
No, it doesn't.
Why else did they come up?
You can't emoji yourself through a conversation.
I emoji my way through life.
So relatable. So relatable. Oh, us poor millennials who just need to put a smiley face at the end because we're worried about what everybody's going to think.
Oh, boy.
Yeah.
All right.
Our parents made us this way. Just kidding. I love my parents.
All right. So let's get into bank accounts.
All right.
Listen, if everything that I said about scaling your business and building a massive real estate portfolio resonated with you, then one thing that you have to be worried about, and one thing you're going to really, really, really need to plan out, is how the fuck are we going to manage all these bank accounts? Listen, you're not going to be, you don't have $5 million. Okay. And even if you did have $5 million to buy all the real estate that you needed and all the real estate that you wanted, you probably wouldn't be able to get the mortgage financing for all that. The way that most real estate portfolios are structured are through partnerships and joint ventures, okay? Whether that be through corporations, through GPLPs, through USAs, through joint venture agreements, however you're structuring them, okay? It's going to be through partnerships. And those partnerships are going to have many different bank accounts. And there's a reason why you have to have many different bank accounts, and you can't just put it all under one. Has something to do with the CRA, the Canada Revenue Agency, and the traceability of funds. This comes down to bookkeeping. This comes down to taxes. And it is very important. And it is not an area, like I said, that I have ever dealt with, ever in the whole history of us owning real estate. I haven't touched our bank account since we bought our first house. There was a week that I said, because I used to, when we first met, I was the one in control of the finances. I paid everything. And then as soon as we got a rental property, Gabby took it over, and she hasn't handed it back to me since.
Wayne hasn't known the banking password since.
I don't.
It's funny. Actually, yesterday I was trying to get into our corporate bank account, and it was like the password wasn't working. And I asked Wayne, I was like, Wayne, were you in the bank account? And he's like, what bank account? And I'm like,
exactly.
And I was like, such and such corporation. I'm not going to say the corporation name. And he's like, no. And I'm like, yeah, dumb question. Sorry, never mind.
Why would I be in the bank accounts?
It's like, and then I yelled out, I was like, you don't even know the password, do you? He's like, nope. Yeah. So yes, I do take care of all of the banking for all of our corporations, for all of our personal stuff, for everything. So if we ever go down, I apologize. No, just joking.
I'm sure there's a sticky note somewhere.
Yeah.
That's got 4,000 passwords and account numbers.
Yes. No, just go onto my computer. They're auto saved in there.
And it's hilarious because this email, literally in the first line of this email, it says, "Hello, I'm wondering if Gabby, sorry, Wayne, in brackets, if she would be able to give some guidance on organizing banking." Is it that obvious? Is it that obvious?
We've said it before in the past.
You know what? And if you want to learn how to raise millions of dollars and you want to learn how to scale your portfolio and how to buy the perfect properties that get the highest return on investment and the highest cash flow and cash on cash that score the highest on the cash flow test, I mean, I'm your guy. You want to learn how to structure a seller financing deal and sandwich it with a rent to own like we talked about yesterday, I'm your guy. You want to learn how to fix and flip and budget and make profits doing fix and flips or burn properties but I'm your guy. Bank accounts, though, yeah, you're absolutely right. I'm not offended by this at all. This is totally Gabby's area of expertise. And because Gabby is the systems expert.
Yeah.
Gabby is the rental business systems expert and landlord and tenant management expert as well. You guys want any questions about managing tenant relationships or managing your business systems for your real estate portfolio or your business as well. Keep in mind that we're just talking about our real estate portfolio. These are our investments. We still have 5 other companies as well that we run that I have no idea what happens. I just come up with a really cool idea and then I build a team and then Gabby manages that team. That's about it. And then I move on to the next cool idea, which I'm living my dream life, by the way. No complaints whatsoever. Gabby gets to do what she's good at. I get to do what I'm good at, and I get to be who I am every single day. I love it. Okay, but if you guys got any questions about that kind of stuff, Gabby, other stuff, Wayne. Makes a pretty good podcast, though.
Yeah.
Now the question is: do you have separate accounts for each location's rents, or do you combine them? And if so, how? Let's start with that because different locations, different properties. Let's just start with this. Can you put different properties in the same account?
Yes.
Yes?
Yes, you can.
You can?
The answer is yes. You can have multiple properties go into one account to be managed through one account. And what you're going to want to consider is, Wayne earlier brought up, the reason why we might be looking at separating these things is for traceability, for when we're filing our taxes, for ease of bookkeeping, you said that the CRA cares. The CRA doesn't care how many bank accounts you have. They don't care if every single property you own is being managed out of one bank account. What they do care about, though, is if they audit you, the traceability of each of those transactions that you deducted from. And can you show where that came from and what it was for and all those types of things? So what it really actually comes down to is how good you are at bookkeeping or how good the person you hired is at bookkeeping. So if you are a rock star bookkeeper or if you've hired a rock star bookkeeper, in theory, and I'll debunk this later, but in theory, you could have all of your rental properties in one account and just have all of your invoices saved and titled appropriately so that you know which property it was for, what date it came out, what it was for, all those types of things. And then the bookkeeping will show the records, right? So you could just have one bank account for all of your whole rental portfolio.
Yeah.
That would be fine. But now let's break that down, and I'm going to tell you why you might not want to do that.
Mm-hmm.
First reason being, maybe you are not a rockstar bookkeeper, or maybe you're cheap and decided not to hire a rockstar bookkeeper. What a mess that would be to have a large portfolio, and every month when you're going to reconcile, all of the bookkeeping, you're like, oh God, what was that for? And you're trying to look through your emails, trying to find an invoice because you're also lazy and didn't save them as they came in into your records. And you're trying to reconcile all these random payments that you made, right? That would be an absolute nightmare. So that would be one reason why it might be beneficial to separate them out into different bank accounts. Let's look at another reason why this would make sense. Maybe you don't own all those properties by yourself. And like Wayne said, you have joint venture partnerships.
In most cases, that's what you're going to be dealing with.
Most people, as they scale and as they grow this big portfolio that we're talking about, they require partners to bring capital to be able to make those purchases.
Lots of partners.
In the form of joint venture partnerships.
Lots of partners. Right? Now, you might own one property with a joint venture partner, or you could own 10 properties with the same joint venture partner. But then you could own 5 properties with another joint venture partner, 1 property with the third joint venture partner, 2 with the fourth, and maybe then you also have one that's in a corporation with 5 different shareholders. Mm-hmm. So again, it's going to depend on each. Yeah.
Yes.
But.
And so in each joint venture partnership, when you open a bank account for said property, what needs to happen is you both need to have access to that bank account. So when their mortgage payment is being made, that bank isn't going to accept some random person's bank account for the mortgage payments to come out of. They need it to be the title holder, right? Yeah. So both of you need to have access to that bank account to make the business run. And if somebody has access to that bank account, are you going to put a property with a different joint venture partner into that same bank account? No. Right. Multiple people can't have access to these same properties. You can have the best bookkeeping in the world. That just doesn't make sense. So as you form these partnerships, you are going to need separate bank accounts with those separate partners. And in this instance, or even if it was just yourself owning these properties, in theory, you could put as many properties as you want into that one bank account, so long as the ownership structure is the same on each of them. So I own all these properties myself and they are all in this bank account. I own 4 properties with Wayne and they are in this bank account. I own 10 properties with Carmen and they are in this bank account. And I own 2 with Stuart and they are in this bank account.
Stuart's like, yeah, let's go.
So,
well, can we just slow down and go back to that again? So it's just so that you guys understand, as long as you own the properties, this 4 properties with the same person, there's no reason why you can't use just one account.
Yes.
With that partner, okay? As long as it doesn't include a property that has somebody else owned a share in. So that's a very efficient way of managing your bank accounts and managing your bookkeeping, because it's all just in one account. Rather than if it was 4 properties, rather than having 4 different bank accounts, after a while, and I promise you guys, if you're planning on being successful and you're planning on building a massive real estate portfolio, you do not want that many bank accounts. I promise you. You do not want a bank account for every single property. I know it sounds really cool and it might be a great way of organizing. You can even put little tags or labels on each account and the address on it. But my God, that's way too many bank accounts. Way too many.
Yeah.
Okay? For the level of success that you're trying to achieve. For us, I promise you, we're pretty efficient with our bank accounts, as efficient as we could possibly be. It's a ridiculous. I do not even know how many bank accounts we have. Gabby has a spreadsheet.
I was just about to say, I'd be interested to know in the chat here for our live listeners, how many banking apps do you have on your phone? Just pull up your phone. You have 0. Wayne has 0. How many banking apps do you have on your phone? And I pulled up mine as Wayne was talking, and yeah, so I have like a finance grouping. It's called finance, and in it I have I counted, it's 9. I have Scotia, RBC, Service, ATB Business, Simply, TD, EQ Bank. So these are all the different banks that I have accounts with. So yes, I do have a lot of different accounts. And those are across different banks as well. Yeah. And so, going back to, they at least need to be broken out by ownership. Right?
Yes, by ownership. And so one of my questions I was going to ask you was about, what about your own personally owned properties, the properties that you own all in your name? Yeah. Let's just use that as an example.
Yeah.
Would you separate them, or,
Yeah.
would you keep the follow-up question for that, which was in this email, was that, like, let's say, for example, you keep a reserve fund for each property.
Yeah.
You know,
Well, I want to get to that after, though.
okay, that's fair.
I don't want to complicate this.
Okay, fair
But
enough.
if we go back to, say, all of our personally owned properties, and the question is, should they all be in one account or should you break them out? I think that the real only consideration that you need to take goes back to the management of it and how efficient either you or your bookkeeper is at separating out those transactions. Because at the end of the day, there's typically only a few transactions per month in a property, and then sometimes you have some repairs that need to happen, right? So the
Right.
mortgage comes out, the property tax comes out, the insurance comes out, and then maybe a repair.
A shower
on this
head
property,
replacement.
A shower head replacement, yeah. So there's very few actual transactions per property per month. So the bookkeeping is relatively simple in this type of business. So it comes down to how efficient you are in your business and in your bookkeeping to manage those. I like personally, if you're asking me, I like to have a max of 4 properties in one account before I want a new one, just for my own ease, to be like, okay, this isn't a gigantic mess that I need to sort through every month or every 6 months or every year, however often you do your bookkeeping. It just is like a little bit of like peace of mind, like separation for me.
Yeah.
Yeah.
There is one other note that I wanted to add before you move on and talk about some of the other things. And we only got a few minutes left in the podcast, but one bank account for all of your properties. But here's what I'm noticing lately a lot. I'm noticing lately a lot of lenders, mortgage lenders, are requiring us to use their bank. They're requiring us to use their bank that the mortgage payments come out of.
Yeah.
And
they're even incentivizing.
yes.
Yeah.
We have one that is offering, what is it, $2,000?
Yeah, $2,000.
$2,000 if you set up a bank account with them
And
have your mortgage payments come out. They will give you a $2,000 credit, which is
yeah.
Yeah, absolutely.
And actually, that'll
will.
be a new banking app added to my phone this month.
That wasn't there before.
That wasn't there before.
And that's a tremendous incentive there. But that requires, now, if you have a joint venture partner and this is the 5th property you're buying with them, well, now we got to go get, this bank requires us to use them and this bank requires us to use them. Now we have multiple different accounts, all because the bank is the lender is requiring us to set up accounts with them.
Yeah.
So that's another consideration, and that will definitely add to your spreadsheet of different accounts.
Yes.
And I promise you, if you're planning on being successful and you're planning on building a massive real estate portfolio, guys, this is going to give you a headache. It's going to give you a headache. So setting it up properly, I would say, like, making sure that you have got good organization and good organization of all the different accounts, and making sure that you're capturing it somewhere and managing it is really important. And your passwords, pass keys, all those other types of things. Yeah. Nothing worse than getting locked out of a bank account because you can't remember the password and you can't remember your mom's maiden name.
Get it together. Okay, let's move on to the reserve fund.
Yeah. So, assuming you can put them all under the same account, assuming that there's no issues there, Carmen had asked, well, what about your reserve funds? Because you have a certain minimum reserve fund for all of your properties, or are you okay blending them all together?
Yeah.
And that's a personal decision. I think that, if you put them all into one account, it's fine. I mean, if you need to know how much the reserve is for this property and how much the reserve is for this property, it doesn't really matter, really. It's a reserve, right? Unless, of course, it was split up between different partners, and that would be different. You would have different accounts. But assuming that it's all under one partnership, you and somebody else, or just your own personally owned properties, it doesn't matter how much.
It doesn't matter where the money came from, who it's allocated for.
It's all being taxed the same way, too.
Yeah, and it's all your money.
Yeah, so it doesn't really matter. It's a reserve.
Yeah,
it's not
just
specific.
Money there just in case, so that, something doesn't come up and it needs to come out of your pocket, and all of a sudden you look and your pocket's empty and you're like, uh-oh, how am I going to pay for that? That's what a reserve fund is for. It's so that there's no uh-oh moments, right? Yeah. And so it's just money sitting there to make sure that, when something happens, you're not like, shit, like I can't afford this right now.
Right.
And so it really doesn't matter. Like, yes, the question was asking us, like, do you have one account for a reserve fund or
Yes.
multiples? The money, the reserve fund can be pooled together as long as it's in an account with that same ownership structure that we talked about.
And
So
if
if
you-
I own all these properties I said I keep 4 per bank account. I own those 4 properties solely. They're in the same bank account together. I establish a reserve fund each time I throw a property in there. I put more money in to cover it, and it's just all pools in there. Yeah. And eventually, if it starts depleting, I just throw some more money in. It's not directed at a certain property. It's just making sure all the properties are sufficient. Right.
And it's pretty cool. I mean, I've never been in one of those bank accounts, but I can only assume that, the ones that have, 4 or more are probably sitting with over $100,000 worth of cash in there. You open it up and it's just like, holy shit, that's a lot of money. I could buy a property with that. No, that is for the reserve, not for you. No touch. No touch. And I just wanted to add that if you really wanted to, like, I really want to know, each of these properties at a certain amount of cash flow come out. I really want to know how much is in the reserve for each property. Just do it in a spreadsheet. I mean, if you got decent bookkeeping, then a basic spreadsheet can tell you how much is each reserve, right? And you can just manage that on your own. It's not that much work, right?
Yep.
Money in, money out, and you can see cash flow goes into the reserve. You can just
Yep.
have
Your
it
ledger will tell you
Your ledger
where
will
the
show you.
account is at for that property. Yeah.
But save yourself from having to manage additional bank accounts when you don't need to, right? Your spreadsheet can do that for you.
Yeah.
Right. And then the last part of this is, what about security deposits? Security deposits is a different story. It's not the same as the reserve fund. You want to know that, when your tenant sends, of those 4 properties, you have 4 tenants who are going to be sending in separate security deposits. And, can you just put them all into the same account? Gabby?
Do you know what we do?
I have
Or what I
no
do?
idea. I have no idea.
What would your advice be in this situation? I'm
My
curious.
advice would be, what does the law say?
I'm not sure that the law.
Interest-bearing trust
Yeah,
account.
all that the law says is that it needs to be held in an interest-bearing trust account, and that the interest must be at least the amount in which you are required to. What's the verbiage
The
here?
yearly posted amount.
Yeah, the yearly posted amount. So like the province of Alberta right now is at 0. You don't need to pay any interest. So, this kind of, but, last year it was like 0.5 or 1.5 or like whatever, it changes, right? So the interest bearing account has to be at least the minimum of what the posted interest rate is at to collect on those security deposits. But I don't think it specifically says it needs to be in its own account or anything like that, just that it needs to be in an interest-bearing trust account.
Yeah.
Okay, so, and the verbiage trust account is kind of, we don't need to debate that right now. But what I do is I have them all in one account. I could not imagine having a separate, not only having bank accounts for each rental property to operate as a business, but then to have a separate account for the security deposit for that or for that group of properties. That's just insanity in my mind.
Yeah.
So yes, I have one interest-bearing savings account, a high interest savings account that I put all security deposits into. And it's so easy to track because it just it lines up with when that tenant moved in and at what the amount of their deposit was. So super easy to know, to see the money in and money out in that sense on, tracking the dates. And it has a lot of money in it.
Yeah.
A lot of money in it. And you do not touch that account.
You don't touch. No touch.
No touchies.
No touch. That's probably the hardest part for real estate investors, is seeing those accounts with all that
It's
money
like,
in there.
how much more money I could make off of this, right?
Oh man, if I just got a 5% return on this, my God, all that money's just sitting there doing nothing. Not a bad idea, actually. It's something to think about is a low interest account or something like that. But a topic for another day.
I do have one variance to say to that statement, though,
Right.
is that if properties are owned in corporations, that corporation must have its own savings account in the corporation's name that holds security deposits. So if I own, properties in XYZ Corp, those security deposits need to be held in a savings account under XYZ Corp. They cannot be put in this general pool of security deposits under my own name.
Right.
So that's the only.
And there you have it, folks. If you're planning on building it big, build it right. Chris says, you know what? I prefer bank accounts for each individual property. And Chris, you are a psycho.
I will just straight up say it, for the amount of properties that we own, that would be an absolute fucking nightmare.
Oh yeah.
That's our show.
And that's our show, guys. Thank you guys so much for joining us today. Thank you for joining us this week, and we will see you on Monday.
Have a great weekend.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.